So you had been saying, let's say a few weeks ago that we could get some choppiness in the first part of November, but you were still kind of bullish looking beyond that. What, in your view, has the market been contending with in recent weeks? What did we learn, and how does it set us up for the outlook here?
Yeah, well, I think the market's been struggling with the same things that it's grappled with all year, which is a monetary policy direction that's not completely clear. As you know, the odds of a December cut have really jumped around from as high as 60 down to 30, back to 80. And the second is, of course, policy volatility, because the administration does make proclamations and statements that are sometimes head fakes but confuse investors, and it's all resulted in really suppressed enthusiasm for stocks. Sentiment has been bearish.
And then that, led to a 5+% pullback in the S&P 500. A lot of the more aggressive parts of the market took on a lot more pain than that. Where does it leave us in your mind? I mean, as I mentioned, 4 days, this market has barely even flinched at pretty much all the hurdles that were along the way. The moving averages, we got above last Thursday's high. We know it's kind of an upside bias the Wednesday before Thanksgiving and the Friday after. But beyond that, where do we go?
I think we're set up for a really strong rally into year end. And I know we just came out of a pretty terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. It's really a 5 to 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. As we're doing work into next year, and I think earnings visibility is going to be really good. So I don't think I'm questioning if earnings are peaking. It's more just that stocks price in and correct enough.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes. I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. Yeah. But it's a replay of this year. And maybe we've now had 3 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period. Now,
you mentioned, obviously, the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero. Yeah. And it was because of a pricing error, what I would call a glitch. It led to what they call auto deleveraging.
You've definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Yeah. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite because there's so much more leverage, and that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom, but now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
We're watching it right now at 89.5, firming up throughout the day.